Welcome to 2023 and welcome to a very special weekly update. 2022 is over, and to kick off the new year, we asked 5 experts their best advice for resource investors in the new year. Without further ado, let's find out what they had to say. Kicking off the list is Nick Barisheff of BMG Group. In today's tough economy, he's noticed a trend of investors liquidating physical precious metals for cash. This is risky in his opinion, and he pointed to physical silver as an option for those short on funds.
Well, if you're tight for cash, then the easiest thing to be doing is buying silver kind of on a regular basis and dollar cost averaging in. Silver is still affordable. It's just under 24 bucks an ounce. So even if you're short on cash, you can always still buy a few silver coins on a regular basis. At least that gives you some coverage. So that would be the easiest thing to do. If you've got a lot of spare money, then you can buy gold and go from there.
David Morgan of the Morgan Report encouraged each investor to figure out the right amount of precious metals for their portfolio. He sees a need for balance, but did say that in general, he wouldn't recommend any conventional assets right now.
But my advice would be, know what you're doing, and I think anyone listens to your show does. You don't have to overdo it. You know, there's a right amount to eat, and if you eat too much at Thanksgiving, you actually don't feel as good because you overdid it. So you don't have to overdo it in the precious metals. If you are underweighted, definitely do it. If you're in that decision-making process we talked about earlier, and you don't know where to go with your money, parking it in the metals at this point in time, I think is safe, and you can decide later. I wouldn't recommend anything that's conventional at this point in time, unless you know more than me, and certainly there's cases. Oh, that real estate deal is like a super bargain. Buy it, well then buy it. But on a broad brush perspective, I wouldn't want to be in stocks, I wouldn't want to be in bonds, and I wouldn't want to be in real estate. I wouldn't want to be in crypto. So where do we go? Precious metals.
Chris Vermeulen of thetechnicaltraders.com is next, and he said that the buy and hold strategy will be risky for older investors in 2023. In his view, stepping out of the market could be a better option than staying in and potentially seeing major losses.
The buy and hold, if you're more or less 50 years of age or older, the buy and hold strategy to me is one of the riskiest ways you can invest, because you don't have time for a 7 to 12 year potential correction. If we go into a really nasty correction, it could be like the 2001 market top, and it takes 12 years for the stock market to come back again. And you don't want that. So you really got to manage your risk. It's better to miss out on gains, keep your wealth and your lifestyle, than it is to worry about missing out on some gains, but actually take a huge loss. And people just feel like they need to be in the markets all the time. And you generally do, but not in a bear market, not when things are going backwards. It's best to step aside and go do other things with your life than watch your money just vanish before your own eyes.
For his part, Gareth Soloway of InTheMoneyStocks.com encouraged investors to get educated on chart reading and market psychology.
I would say it's to get educated in terms of chart reading and understanding the market psychology. The reason I say that is bear markets really show us that we don't know what we think we know. We all think we're geniuses in the bull markets. Everything goes up. We make lots of money. And then the tendency is to give it all back in the bear market. Well, learn how to read and find the signals when a top is occurring. And all of a sudden you increase your net worth over years exponentially. Imagine if you had Bitcoin at even 30,000, but you sold it at 65 or 67,000 because you saw the signals that were there in the chart that a top was there. So much money to be made, taken off the table, and then reinvested at the right times. And I think, again, it's a holiday season. Go find yourself some good education and splurge for yourself.
Finally, resource sector veteran Rick Rule of Rule Investment Media said he sees a substantial risk of a recession in the next 5 years. With that in mind, he believes people need to prepare for increased risk and higher volatility. Here's how he suggested investors do that.
I think that investors need to prepare themselves both for increased risk, but also increased volatility. And you do that in two fashions. One, I think investors need more liquidity in their portfolios, even though the liquidity costs them purchasing power. Having that liquidity will give you the tools to take advantage of illiquidity rather than being taken advantage of. And I think that investors also need to steel themselves. They need to invest in their own education and their own temperament so that they understand that volatility is different than risk. And risk isn't something that you should fear, but rather something that you should prepare for. So I would suggest the twin pillars of education and solvency are the two things that investors on a very grand scale need to think about for 2023.
That's all for this week. If you like this video, make sure you subscribe to our channel and turn on notifications so you don't miss future updates and interviews. You can also follow us on social media or click below for our free report or any article mentioned in this video. We'll see you next time.